Hello guys, so today we are going to talk about arbitrage trading, what it is and how does it work. So arbitrage trading attracts traders with its simplicity since it is enough to find an asset traded on several markets at different prices to make a profit. So in arbitrage trading, both profitable and losing trades are possible as in any type of trading. New markets with less liquidity and weak regulation offer the best opportunities for private arbitrage traders. For example, the cryptocurrency market is less efficient than the stock market, which is more suitable for arbitrage trading. So in this article, you will learn the specifics of each type of arbitrage trading, explore popular trading strategies, and determine the conditions under which a retail trader can profit from arbitrage trades. So let's begin with what is arbitrage. So the goal of the arbitrage is to extract profit from differences in prices for the same asset. A trader enters sales on a platform where an asset is traded more expensive and at the same time purchase the same asset where it is cheaper. So physical retailers are a real life example of arbitrage. For example, dealers who buy used cars cheaper in one country and sell them more expensive in another. Arbitrage trading involves buying and selling stocks, currencies, derivatives, and cryptocurrencies. If the company's stock is traded on the New York Stock Exchange at $5 and on the London Stock Exchange at $4.7, this is a great opportunity to enter arbitrage trading, provided that the profit exceeds the cost. As a rule, transaction speed is very important in arbitrage trading. A powerful computer, high-speed internet, and automated trading programs can be advantages. Manual arbitrage is profitable in new markets such as cryptocurrency and unprofitable in developed and efficient markets such as the stock market. So what is the arbitrage trading in crypto? Crypto arbitrage trading is based on opening opposite trades with the same cryptocurrency but on different exchanges. Therefore, during crypto arbitrage, it is necessary to have a deposit on at least 2 crypto exchanges. The crypto market is highly volatile, so the discrepancies can be more significant than on the stock or currency exchanges. Also, this market is not strictly regulated by law, so people are reluctant to transfer their investments there. As a result, low liquidity allows price discrepancies to remain longer than in developed markets. So the volatility and liquidity of the crypto market still make it possible to earn on arbitrage, even for manual traders. So the general idea of a crypto arbitrage is to find cases where the same cryptocurrency has a different price on 2 different exchanges. Since arbitrage traders sell an asset with a higher price, they increase the supply, pushing the price down. The second trade is the purchase of an asset at a lower price, which means an increase in demand and upward pressure on the price. Thus, more arbitrage trades are concluded, the smaller the price discrepancy will be. Therefore, a crypto arbitrage trader must learn to identify such situations and enter relevant trades very quickly. Crypto arbitrage trading risks. So the main risks during crypto arbitrage trading are security and timing. As participants in exchange trading, crypto arbitrage traders are exposed to the risk of fraud associated with hacking accounts and crypto exchanges. Also, crypto arbitrage traders run the risk of losing their funds in case of dishonesty of a crypto broker who can close the company by stealing clients' money. So, since the cryptocurrency market is poorly regulated by law, pay close attention to security, namely choose brokers with a high reputation and protect your account with additional verification. So the execution of arbitrage trades is associated with timing risks. Traders can take advantage of crypto arbitrage trading in 2 ways: by mechanical means through the purchase of powerful equipment for trading and high-speed communications, by using automatic scanners to search for arbitrage opportunities and specialized programs for opening trades. And the more time has passed since the opportunity to enter arbitrage trades appeared, the more traders will sell the asset at a high price and buy at a low one. Because of this, the price difference and profit potential will decrease. And so, The arbitrage trade may become inappropriate at some point, as the profit potential will not cover the costs. So the costs include various commissions a trader pays during arbitrage trading, such as opening a trade, transferring funds between exchanges, or withdrawing funds from a trading account. So types of arbitrages. So there are several types of arbitrage trades. Classic arbitrage refers to investment and financial markets. So retail arbitrage occurs when a product is bought in one type of market and sold in another. Merger arbitrage is related to the corporate takeover process. Convertible arbitrage refers to the convertible bonds and their properties. Triangular arbitrage refers to the foreign exchange market and its main instruments, currency pairs. Pure arbitrage, pure on or spatial arbitrage, is an intermarket arbitrage of the same product if its price is not the same in different markets. So for example, stocks of large companies such as Sony are traded on several exchanges. So the opportunity to enter spatial arbitrage will arise if the Sony price on the Tokyo Stock Exchange is lower than on the New York Stock Exchange. Spatial arbitrage is a purchase of a security on TYO with a simultaneous sale on the same security on the NYCE. So pure arbitrage is almost possible when trading currencies and cryptocurrencies. Operation times of some trading sessions in the Forex market coincide with each other. So for example, the American market opens before the European one closes. As a result, the euro can be traded in Europe and America at different prices. So a price difference between highly liquid and low liquid exchanges is also possible during crypto arbitrage. So for example, buying or selling BTC on the highly liquid Binance is $16,739.07 to $16,739.56. And on less liquid Bitfinex is $16,740 or $16,742. Therefore, it is possible to buy BTC on Binance at the previously price while selling on Bitfinex at their price using a less accurate quote. But due to development of the automatic process, the difference in intermarket prices are getting smaller every day. So pure arbitrage, especially manual, is becoming rare. Retail arbitrage is popular when trading physical goods. For example, a person can buy a physical product in a local market and then resell it to a final buyer in another city at a higher price. So the benefit for the final buyer is that the amount of the margin is less than the potential cost of traveling to another city or country for the desired product. Since the sell trade occurs later than the buy trade, profit in retail arbitrage is a reward for taking on several types of risks. The first risk is associated with the number of people who want to buy this product. And the second concerns the opportunity to resell the product at the right price. Then we have merger arbitrage. So this type of arbitrage trading occurs when one public company acquires another. And under the terms, the acquiring company must buy back the stocks of the target company, the one being sold. The purchase price is usually set above the market price so current shareholders can profit. When information about an acquisition becomes public, arbitrage traders start buying shares of the company that is being sold as they expect the price to rise to the share repurchase target. Further, when the target price of value is reached, the buying company becomes the counterparty of arbitrage traders. And so, the possibility of a successful transaction is not guaranteed due to blocking by regulatory authorities or due to force majeure. Therefore, arbitrage traders cannot be sure that they will be able to sell the asset at the stated buyout price. And basically, that is how arbitrage works in financial markets. So guys, thank you for watching. As always, I hope you learned something like this one. If you did, of course, leave a like and subscription under this video. And if you have any suggestions or questions, leave them down below in the comments. Right now, I'm ending this video. Thank you again for watching, and I'll see you in the next one. Take care and goodbye.